Hi, everyone. Welcome to Ask the Planman. Everything you want to know about finance, insurance, and more, but we're afraid to ask. I'm your host, Bruce Weinstein. Today, we're going to be sitting down with Chris Pawlowski because people are now, more than ever, working for themselves. Just as we all need a financial plan, business owners and entrepreneurs today need to have their own marketing, tax, and business plans. Chris and his wife, Christy, started VIP Accounting Services over 6 years ago with the focus on helping small business owners realize the importance of accurate and efficient corporate accounting as it relates to their overall profitability, and it helps plan for their long-term success. So first, Chris, welcome to Ask the Planman. Let's jump in. Give us a sense of what it is that you do versus somebody's CPA as they know it.
Well, first of all, Bruce, thank you so much for this opportunity to be on your podcast. We're really excited. VIP Accounting Solutions is helping a lot of small business owners. The biggest difference that we see is a lot of small business owners say, I've got a CPA, and that's great. You should have an excellent tax preparer. But that's your tax accounting, as we call it. During the whole year, you want to focus on what's called your business accounting. And more often than not, what I see small business owners tell me is that they don't really meet with their CPA regularly throughout the year, at least on a quarterly basis. And then at the end of the year, everybody knows what it means when I say they get the white packet. They get the packet from their CPA, and it's up to them to fill out that information. And that's great.
Let's stretch that out a little bit. I'm sorry to cut you off. So
Sure.
Again, you and I might know it, but some of them may not know it. So what are the components that go into some of that? Is it I've used the term bookkeeping. Is it fair to say that the terminology is synonymous? That the accounting the accounting solutions you provide, some people might refer to as bookkeeping. Is that fair, or is that?
That's fair, and that's part of what we provide.
So bookkeeping is only one component.
That's that's like if you just need your monthly books, reconciled at the end of the month. Most people understand you want your monthly books reconciled. That's your bookkeeping, making sure your expenses and debits and deposits are all accurate, and more importantly, they match what you're seeing online. A lot of people, some business owners will say, I've got my books, great, but they've never reconciled, so they're going off of false data. So right there, you have incorrect data that you're working with. And you definitely don't want to do that when it comes to your taxes.
Sure. So a lot of people might know what the bookkeeping side is.
Yes.
To me, that maybe limits where I go with this. So what comes next? So I got my reconciliation every month, every 90 days. You are going to do something that my CPA may not be providing, or the CPA leverages you,
right?
In the sense. So what does that? Let's just call it a 90-day checkup.
Yeah.
What does that look like? What entails?
That's a great question and point to bring up. The CPAs, we have relationships with CPAs. In fact, we got a referral from a CPA firm that didn't want to do the year-long bookkeeping and higher level accounting that we do, that goes above just your regular reconciling and bookkeeping. So at 90 days, and actually before that, because our clients work directly with one specific staff accountant, so they have an intimate relationship with them, because we understand how serious a business owner's money is, and we take that very seriously. But at 90 days, we not only look at your reconciliations, but we look at how those are coded. You might be putting a marketing cost in as a owner's deposit or owner's draw, and it's not set up correctly. So what we can do is, once we have it set up correctly, which typically with our new clients, it takes maybe 90 days, because we don't want to come in and just say, you don't know what you're doing and let's tear it all down. You might have some things that are working great, and that's awesome. But if you don't know how to look at that data on a quarterly basis and take a self-assessment as a business owner of where your business is at from a cash flow standpoint, from an expenditure standpoint, or if you're thinking 3 years, 5 years down the road, how does that impact those terms, those plans, and the things that you need to do to set in place so that you can make the correct decisions? That's what we help the small business owners really understand.
Okay. So again, for me, I'll go with what I know or don't know. Let's connect the dots, because I'm not necessarily. That's why you're here. This is your space. So to connect the dots, and a couple things I want to say in here. I'm sure there's going to be new business owner listeners, and hopefully will be longer term business owners, and then part of my questions is, is there a certain size or a timeline before somebody needs or obviously can afford to pay for the extra, the types of services? But let's hold that off for a second. So the connecting the dots for me would be, what am I doing with this information? I get the bookkeeping. I have deposits coming in. I mean, it depends what your business is, right? So we're insurance, so we get commissions paid to us throughout each month from various vendors, and so we reconcile that and which category they come in, so I know what's a Medicare commission versus a life insurance commission. Okay, if I'm selling widgets, how much is coming from screws, hammers, and nails, right, versus shovels and snowplows? So it's reconciling whatever the people's business lines are selling, so they have their sales data, and then I monitor my expenses. So I'm paying for software subscriptions and the lighting for this and my YouTube channel and whatever it is I'm paying for. So now I have expenses, and then of course your features of the auditing and reconciliation is, I used the term with you before, is, where'd this guy Montgomery come from? How come we're sending him checks every month? Nobody knows who he is because somebody's stealing, right? So there's some circuit breakers in there for that. All right, so thank you for letting me elaborate at least some of the setup. So then let's put the question in is, so now that you have all of that data, what's the bridge? What are you doing with that? And what's the value or the need the business owner may not be recognizing why they need this and what it's going to do for them? Can you elaborate on that?
Yeah, I mean, sometimes it's a case of the small business owner. What I've seen over this, the time that we've been in business is business owners, they're not passionate about their bookkeeping, and it's almost like a foregone, kind of, I know I need to get to my books, because they want to focus on what's their passion for their business. What we can do is take that data that we're able to organize properly for them and allow them to look at their expenditures, their marketing costs, their payroll, things they have in the pipeline, and help them plan. So it's different than just, yeah, here's my monthly numbers. It's, well, are you planning on a new location? Would you like to hire a new person? That's all great, but you don't have a magic wand as a business owner. You need the cash flow to be able to do that. And where another benefit comes in is because we keep up with, the ever-changing tax regulations. I mean, the IRS hired, 126 plus new audit agents, and with the new laws, there's a lot of change in the tax laws, especially when it comes to your business. So we can keep up on that and help educate the small business owner about how it affects them and how they can take advantage of it, because that's the rules.
So would this be an accurate statement? A lot of times we talk about the planning is you want to be proactive versus reactive. Would it be a fair statement, and if it's not, that's okay, that the CPA is looking back at the year while you're leading them throughout the year, because you're giving them real time information. By the time the CPA steps in, the books are closed. And now he or she is reconciling and putting that together and saying, well, we need to do this, 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 and this to fine tune it. But you're the tour guide. How's that? You're the tour guide for the year before bringing them to the CPA. Is that?
Yeah, that's a great way to talk about it. That's absolutely fair. One of the kind of analogies that I use with small business owners in terms of what we do is, if we are flying from, just say for example, Los Angeles to New York, most people know that a plane is constantly in a state of correction. The pilot's got to correct, they have it on autopilot, so it keeps them going towards their goal. As a business, your goal is to be as profitable as possible, provide good customer service, hopefully, if you're a business owner, that's your mindset, and the longevity of your business stays. But if you're not course correcting, just like in a plane, if we don't course correct, all of a sudden we might say, hey, what are we doing in Chattanooga, Tennessee? Well, it's because you didn't stay engaged, and at least at a minimum, and we're not saying business owners have to spend all this time, but when we take care of that stress for them, they can at minimum at once a quarter put their finger on the pulse of their business just to check in, and we can help them understand it in visual or whatever, but that way they know they're going in the right direction. And at the end of the year, when they give that data to the CPA, they have that good data, because once that's done, the CPA more often than not isn't going to turn around and give you that information back and say, hey, Bruce, if you can just kind of change this, well, now you might qualify for some more tax write-offs or a program or tax credit. Who knows? You can insert, there's a lot of opportunity. But so that's where, that's why at the end of your tax statement, it says, under penalty of perjury, the information that I've given to the tax preparer, i.e. your CPA or EA, is true and accurate. So good data in, good data out. Does that make sense?
Yeah. I get it. How about the audience?
Yeah.
Are you folks getting
Yeah,
it
no,
out
that's fine.
there?
I just trying to explain it,
Yeah.
best way I can. Absolutely.
No, again, I never want to intentionally dummy things down, but I always want people to connect the dots and say, how does this apply to me? What's the so what? And as you and I say all the time, I'm sure you do in business, is they don't know what they don't know, and it's our job to tell them. So we want them to know what they don't know. And then, so for me to, so somebody's sitting here going, I just started my own business. Why do I need somebody like Chris and Christy? We want them to understand and put a circle around what the differences are between the person who's going to file at the end of the tax year versus the person that's guiding you throughout the year. And as you said, there might be advantages or programs that come about that you're in tune with to say, look, and whatever it is, if you invested in this section of the county, there's tax rebates. If you hired 4 people from, Kalamazoo, whatever, there's all kinds of quirks out
Right.
there. So you don't
Absolutely.
know.
And those are things that your CPA may be aware of as well too. So that's where we can collaborate with the tax preparer, the CPA, to talk on that higher level of how it relates to the corporate taxes. What a lot of times what I hear from CPAs that I talk to is they want the really good data, but then at the end of the day, they've got to fit it in those special line items. So they're really focused on, here's the data, here's how I can make it best fit in these line items. That's the reactive part. Where we come and where it's different, business owners might say, well, so what? That's what I want them to do. Yes, but when you give them the CPA much more in-depth and detailed data for him to utilize, then he's going to be able to obviously, find maybe liabilities that you can write off. I mean, one of our largest clients, was sitting in a room of CPAs, and this, not to say anything negative about CPAs, because we absolutely need them, they're vital, is the team of CPAs, which was focused on the tax accounting side, looking at the data. We were reviewing a couple years of financials for this, potential client. Christy specializes in forensic accounting, so it's a specialized type of accounting, and she has the experience, 30 years as a corporate controller, high level, and with entrepreneurs that have multiple entities in some cases. He was able to sit there and said, how come you guys, this whole team, men and women, couldn't find the $2 million in liabilities that were missed? And Christy did. So that's just an example. And not everyone's going to find that. And some business owners might be saying, oh my gosh, I don't have $2 million. But if you're starting, to your point of a small business owner, if you're building a house, your business is a house, a temple, a structure. Well, you got to make sure that structure is foundation. The foundation is strong and sound. Otherwise, you start building and it's great. And that's what happens in accounting centers. I don't need that. I can't afford it yet. And we can work with a variety of businesses. We have small business. If you don't have a lot of transactions, it might not make sense for you to work with us, but we can also check in with you on a quarterly basis because it's a lot easier and we can do it in a much more efficient way so you can focus on your business. So
Let's say flexibility in tiers based upon people's needs. It's not
absolutely.
cookie
And
cutter.
a lot of
For
it
sure.
just depends on, how many accounts you have, how many transactions, do you have multiple credit cards, lines of credit, loans, all sorts of things. So.
All right, so I've remembered and forgotten the question I had 3 times already, so I want to get to it. It's the nature of my age. So what the lead-in was basically, those of us who have watched Shark Tank over the years, the biggest craw they always say is know your numbers, right? So in the sense, if depending on what your business is, where Christy and the accounting in general services that we're talking about, as you're being led through the year, let's say you're just a retailer of some kind, online, whatever it is. If you're selling, we'll keep it simple. If you're selling 10 items and the same 3 are selling, how fast do you want to know, let's get rid of those other 7 and just bump up and print and make more of the 3?
Sure.
True?
Yeah,
So,
I mean, and every business owner might say, hey, this is really going to hit, but having the data to make that decision is the part that's really critical to that.
right. It's getting that data. And the same on the expense side. So if I'm marketing for insurance and I'm spending money on an ad, whether it's a print ad, a TV ad, a Google ad, a Facebook ad, I need to know my ROIs. How many calls are coming in? How many leads am I getting? How much business did that translate to? And so I need that data. How do we do for the first quarter? Do I want to re-up with that TV ad on The Price is Right, or should I move over to the Wheel of Fortune show? Whatever it is. Do I want to spend more because it's working? Do I want to cut it out because it's not?
Right,
True.
and I agree with you on the majority of it, because when you're talking about marketing and return on investment for the marketing, that's more of a marketing department to see how many clicks, how long they stay. But when you're talking about numbers, great. A lot of small business owners, they know their numbers. My product costs this. Here's how much we sell it for. But do you know the sales tax that you may have to pay? Are you working in different states? You have different tax rates. Do you know what your direct costs that are going into there? So you actually know your true, profit margin. It's great to know your numbers, but if you don't, if you sell it for $100 and it costs you $98 to make it, well, you didn't make $100. You made $2, and that's that's where the numbers can really illustrate and and amplify where those those parts are in your business that you can either say, like you said, this isn't working, great, let's move on, or no, I want to keep going this, it might be, and that's where the long-term planning comes in. Just like you, when you talk to people about planning the longevity and out number of years, the planning for your cost and your margins and how that affects your business. If you're really planning on having this product line for a number of years, well, then you have to put steps in place and metrics, and that's where we can talk with the small business owner about what's important to them, because everybody's different. But that really unique part of the business that the owner wants to look at, well, that's unique to their business. So you can't just use a template. Here's the way that you do taxes. It doesn't work that way in business. Everyone's different in what they want to focus on.
So as you do this work, as I understand it, and you could elaborate, is you're also the conduit, maybe the gatekeeper on some levels, between the client and the CPA, where you then will coordinate and do higher level things with them, as you and I as professionals in the space can talk at a different level than somebody who doesn't do what we do. The same thing could be held true. The business owner doesn't have the same acumen and the head for the tax type stuff, and so here now you and Ms. CPA, you can do that brainstorming strategic work and then be able to report it back to the client. Tell us how that would work.
You're spot on. I mean, being able to, in terms of that, we talked about that structural foundation. Whether you're a small business starting out, you want that strong foundation. Whether you're a business that's been in business for a number of years, but as an owner, you're saying that it just feels like I should be making more. Well, that's a case of you don't know what you don't know, and that's okay. I wouldn't profess to know their business inside and out. So there's no way that they're going to know how to do proper business accounting inside and out. Yeah, well, with the CPA, when we're talking with them on behalf of the business owner, just like Christy with her 30 years of experience, she can talk way over my head. With a small business owner, the things that I know and you know, we can talk about cash basis, accrual basis, K1s, EBITDA, all that stuff. And
let's be clear, you can, I can't.
Okay,
I'm
but
kidding.
see, but that's where we can talk
right.
with. Yeah, we can talk with the CPA on how that relates to that small business owner's business, and what's the best way to navigate that for long-term profitability and just longevity of the company. So we can have those conversations with the client. We understand, like I was just talking about, we understand what's really important specifically for their business. The business owner may not understand or be able to, because they don't know what they don't know, and that's okay, what questions to ask their CPA, because they're focused on their business. And that's where, if you look at it from the customer client is here, the small business owner, VIP accounting solutions in here, the CPA is here. Well, great, we can have these conversations. There'll be minimal contact between the small business owner and the CPA, but then we can communicate it. But where the really benefit comes in, someone saying, well, so what? That's great. So you talk to the CPAs. We can make sure that things are efficient, because sometimes mistakes happen, and that's okay. Or you might need to make an adjustment to what you thought. With those conversations with the CPA, we can already have that flushed out. But then also, if some people in business are unethical, it's just the way it is, we can provide oversight and an extra layer of protection for the small business owner to say, hey, doing this, you're going to get in trouble, or you really need to do this, and they're saying not to, and we can go to bat. So we've worked with just a lot of clients that's really been a benefit, and it's just that it's one of the things that we specialize in.
So for those listening and not watching, Chris was demonstrating a triangle effect of basically the components. Okay, I some people more we got more viewers hopefully than listeners, but we want more
Yeah.
listeners too. But I know Carl is listening on his car, and my buddy Bruce, so they're not going to see your
Right.
hand go up. So
Sure, sure.
there's a shout out to a couple of my buddies. So
Yeah, no, that's awesome.
the basically the triangle that Chris was illustrating is the three-way conversation between the client, himself, and the CPA, and how
Yes.
it flows back and forth between the three. That it's not lopsided, it's not a seesaw. It's a triangle. You played basketball collegiately.
Yeah.
You know, the triangle offense. It just finding and working and moving it back and forth to get to the right solution, and provide the client the max value.
Absolutely. You hit it right on that. Absolutely.
I try and understand what the hell's going on.
Well, there you go. That's all we can do, man.
All right, so here's one more, and I hope maybe it'll kind of bring us. We have time, but what would you share with the audience, whether new or veteran, as an entrepreneur and business owner? What are some of the top mistakes you've seen business owners make?
Some of the top business owners that I've seen, small businesses that we've seen is one, just thinking everything's okay with their books when things are going well. They're gaining momentum. They've got more and more sales going. They've just started. Maybe they're hitting another gear. They just, everything's great. Everything's rosy. So I'm not really going to look at my books because look, I got to process a sale. I've got to do that, and that's great. But underneath that, you're opening yourself up to liabilities internally and externally. Externally, you're not categorizing it correctly, and you don't know, which is going to cost some expense as a business owner when you have to correct it so that you can get a proper return. So there's one externally. I can list several others, but that's one when I look at it for this example. Internally, and I have to say more often than I'd care to admit, more often than not, sometimes there's embezzling going on, and it's the person that was with you at the beginning or was doing your bookkeeping, but is a bookkeeper. And I'm not throwing shade on any bookkeepers, but be honest, if you're really good at balancing your checkbook at home, that's not really suitable for handling a business with multiple entities, really a lot of moving parts and payroll and all those kind of things. So we found that on a number of occasions, and that's where our forensic accounting background can really help identify that as well too. That's one of the mistakes. Second mistake is they're not being specific in keeping the receipts, or at least a tracking system of what they are spending. What they kind of have a general idea. They're kind of just winging it, like, and it's really easy when money's coming in, but that's what happens is it's great when you're working and you don't have that triangle that we were talking about, that structural foundation's not in place. Sometimes then it becomes lopsided and you have great success, but then you can kind of topple and have to take several steps back that you worked really hard to get to, but you've got to redo it again because you either need extra work, someone is doing something incorrectly, because you weren't really keeping any sort of record system. Other than QuickBooks, and let's say the majority of our clients use QuickBooks Online, and some people say, well, QuickBooks can just figure it out for me. Well, yes and no. Yes, it can track it, but we talked about reconciling your monthly and making sure you're setting up your chart of accounts, how you organize it correctly. And if you don't have that expertise, you might not know how to best set it up. So it's just one of those, you don't know what you don't know from that standpoint. So it's just you kind of shoot yourself in the foot as a business owner, and you're not meaning to. You're working really hard, but that's where at the end of the year, we kind of get two clients that either say, it just feels like I should be making more money, or, hey, I got my tax return back. It just seems like I should have more write-offs. Well, that could be an example of something's happened internally or something happening externally from your CPA, not because they're doing anything wrong. It's just they don't have they can only get you so good of a return. If you have back in the day they had those kit cars. If you wanted a Ferrari and you bought a kit car and you put it together and it looks just like a Ferrari, you remember those? Well, great. Well, I bet any small business owner, if you're sitting at a light and you're going to race two Ferraris and one's a kit car and one's a real Ferrari, there's a big difference. So think about it in terms of your books. You got really good books that you can give to your CPA. Do you want a kit car or do you want a real Ferrari? Because that's going to get you the best return. So,
I like it. Any other mistakes? Pretty much.
But those are two big ones, and not checking in, on your business, or having your articles, basic things sometimes, articles of organization, making sure you're getting your, things like your EIN. Most people know to get done that way. Sometimes it's the estate planning from the law standpoint to make sure that your agreements are in place to protect you, that you're doing things there. They kind of have, well, here's our form and we're going to work on it. But then they come to a certain point and they've been using a form that really doesn't hold their customers or clients accountable. And they say, well, I didn't tell you you can do that. Well, you didn't put it in the agreement that you have. And they're not saying like you need to set up something ironclad and they can't absolutely get out, but you want to have like, yeah, you signed, we explained to you clearly, which is one of the things we take pride in, is being real transparent with our clients and saying, here's how much it is. And you talked about the 90 days. I mean, not checking in can cost you money. And what we actually do after 90 days, 120 days, is we actually sit down with the business owner and say, okay, here's the systems and processes we put in place that you didn't have, or here's the ones we made even better. So here's how it's working. And sometimes that reduces the number of hours that our staff accountant has to work. If you hire someone internally, because some business owners might say, another mistake is, I have to have someone in-house. Why?
It's a full-time employee with benefits. It's a lot of money.
Yeah, well, employee with benefits, great. Well, that's going to cost you more. That's fine. But if you give them 40 hours, they're going to take 40 hours to do their job. We can actually shorten that time because of our expertise, because of our knowledge. We have all of our work is tracked, online and detailed, so that when our staff accountant works on an account, you can go back and see on this day, from this time to this time, this is what they worked on, versus bookkeeping, $300, $500 services for month. That doesn't tell you anything. So those are kind of some of the things that the business owner doesn't realize too, and it can get them in trouble.
Fantastic. Our time is going to start to run out. So let's just summarize some of the bullet points for everybody, make sure they kind of capture this depending on where they're listening and how they're listening. So we're talking about incorporating the accounting services solutions as part of your overall bookkeeping, CPA services, with the messages of know your business, know your numbers, be proactive, don't ignore things. Don't just focus on, we often say people spend too much time working in their business, not on their business, right? Or vice versa. So
absolutely. Or it's a balance. It's a balance. If you spend too much time on your processes and procedures internally, well, then you don't get clients. And if you focus only on your clients and not pay attention to the processes and procedures,
Yeah. Well, my wife got licensed to come into the business with me. She wanted to know about everything and anything. I got to watch this web. I got to learn about that thing. I said, we have no clients. You don't focus on anything till you get the clients. Then you go figure out, and then you can watch the video on what it is that they need. I said, so again, it's the person who's always shuffling their paperwork instead of just getting on the phone and making the call, right? So you gotta pay attention to your business. Make sure you don't fall apart, inadvertently lose somebody. As you said earlier, might be helping themselves to the kitty. These are all measures that are in place. So as you're building your business plan and making a potential launch to go into an entrepreneurial situation, part of your budget should incorporate having VIP accounting services in your portfolio of advisors. And so you may not need it day one, you might need it in 90 days, you might need 180 days, but they can kind of tell you when you might be ready. And so the whole point of this is to know and recognize what this can do for you as an entrepreneur and help you and really know your numbers and give you, as we said it before, knowing what you don't know.
Yeah. I mean, I think you hit it on the head. I mean, VIP Accounting Solutions, what we're all about, and especially, asking the Planman and being here on your podcast, small business owners, you don't start a business, you don't plan to fail.
Right.
You fail to plan. It's the same in your industry, and it's especially true when it comes to your business accounting for your business.
100%.
Because you might end up failing at the end of the year, but you didn't know it because you didn't pay attention enough throughout the year.
I have a signature I have two of them over the years, but one is if you fail to plan, you plan to fail, which you just said.
Yep.
And my other one is you'll always get what you've always gotten if you always do what you've always done.
Yep.
So you can't keep doing the same thing over and over and expect a different outcome. You gotta move the needle, right? And so using these, if you say I can't seem to make a profit, or I don't know how to increase sales, or I don't know what to do to cut my costs, this is where being in tune in real time, not waiting till December 31st, closing your books and then saying, oh, shoot. Right.
Well, even so, December 31st, it might be, because remember, April 14th, that's April 15th, that's tax day for personal. March 15th is for your business. Right. So if you wait until then, you're going to be in trouble. And another way to boil that down is, if you see something that you need to change, well, nothing changes if nothing changes.
That's right.
But it's at least worth a conversation with us to see where you're at. And if it's a good fit, great. If it's not, we don't try and, jam our services because it's not for everyone. And you might not be there yet, but that's okay. We're not going anywhere. So as you grow, we'll be happy to help you.
You're investing in them as well.
Absolutely.
Well, Chris Pawlowski, thank you so much for being on Ask the Planman today. I hope our audience found some nuggets that they could do and take away with and apply to their business or their situation if they're ready to leap into their own entrepreneurship and business ownership. Hopefully this gives them some pre-planning material. You've been listening to Ask the Planman. My name again was Bruce Weinstein. Not was, is, it still be, always will be, I guess. My name is Bruce Weinstein. Please like, subscribe, share. You can find Chris's contact information below in the show notes. And as always, you can reach us at asktheplanman.com, 800 number 844-PLANMAN, Bruce at Ask the Planman. We got Planman covered every which way. So you can find us if you need us. And certainly if you want to talk with Chris or somebody, I don't know how nationally you cover things, but if you
we can work all over the country.
There you go. So if you need to reach out to Chris, certainly go to his contact information in the show notes, or you can always reach out to us and we'll get you in touch with him. I want to thank everybody for joining us today. Again, thanking Chris for being with us. Remember, everybody, when you need some advice, always get it right. Come ask the Planman. We look forward to seeing you next time. Chris, thanks again for being with us today.
Need some advice, never sacrifice, always get it right. Ask the Planman. Finance, insurance, and more.